Welcome again, everyone, and thank you for joining us for today's live webcast, Inside the LEI. I'd like to start this presentation by introducing today's speakers. Steve Goldstein is the co-founder and previous CEO of Alacra. Today, Steve has taken on the role of Vice Chairman of Opus, and Opus acquired Alacra last year. And our featured speaker for today is Alan Samuels, Vice President, Reference Data Solutions at Alacra. Alan is responsible for Alacra's customer, counterparty, and entity reference data solutions. So with that, I'd like to turn this webinar over to Alan, who will begin by talking about the agenda for today's presentation.
Thanks, Sharon. So today, first of all, Steve will cover a little bit about Alacra and the work that we do. Then, even though the focus of today's webinar is actually the 9th edition of our ongoing series, I'll cover a little bit of background on the LEI to bring us all up to speed. Our specific focus today will be on the most recent analysis we've just conducted, specifically the LEI overlap with the rated, regulated, and listed universe, overlap with other entity universes, some notes on global issuance trends, and updates on the current lapse rates. Then hopefully we'll have some time left for Q&A. Steve?
Hi, so this is Steve Goldstein. Thank you for joining us today. For those of you who are not familiar with Alacra, as Sharon mentioned, we were purchased by Opus Global in September of 2015. We're the second company that's part of the Opus family. The first company is a company called Hyperos, which specializes in third-party management. Alacra are specialists in the KYC, client onboarding, remediation, surveillance, and reference data businesses. And we sell our products largely to Tier 1 financial institutions. We've been doing entity reference data or mapping entity identifiers together for over 20 years using a set of computer algorithms we've been working on, as well as a team of people here in New York, in London, and in India. So with that, I'm going to turn it over to Alan, who's going to talk to us about the LEI and where we are today.
Thanks, Steve. So inside the LEI is our quarterly research reports where we cover trends and developments in the issuance of LEIs. It is available, as well as other information about the LEI, on our website at alacra.com/LEI, and you'll also be able to pick up prior editions of the research there. So, as I said, a little bit of background on the LEI to bring everybody up to speed. So, a quick primer on the LEI. Think of the LEI as a barcode for uniquely and precisely identifying parties to financial transactions. It's a 20-digit alphanumeric code that enables clear and unique identification of companies participating in global financial markets. 2008 financial crisis, there was widespread recognition that the inability to identify parties to transactions across markets, products, regions, hindered the ability to evaluate and manage risk. Recognizing this gap, authorities, working together with the private sector, developed the framework of a global LEI system, or the GLICE. There's actually a federated model for LEI issuance. Local operating units, or LOUs, assign LEIs and validate and maintain the associated reference data. Each of the LOUs make their own file of issued LEIs available free of charge. Entities may obtain an LEI from any of the LOUs, irrespective of its geographical location, and we'll show you more about this later in the webinar. The Global Legal Entity Identifier Foundation, or the GLIFE, was created as the operational arm of the GLIFE. The foundation is supervised by a regulatory oversight committee known as the ROC, which is made up of members and observers from more than 80 authorities worldwide. The GLIFE grants the right of issuing new LEIs and of managing the related reference data to the LOUs. Or from the GLIFE. Remember, though, that an individual LOU may not be the source of all the entities with LEIs in that country. In the last quarter, the LOUs issued a little over 20,000 new LEIs, taking the total number of LEIs assigned to around 430,000. Issuance continues to be driven by a small number of LOUs, with over 85% of the new LEIs issued by only 4 LOUs. and we'll show you some of those numbers later. Mapping the correct LEI to a bank's clients, customers, and counterparties is significantly constrained by a lack of cross-referencing and mapping to any other identifiers. For example, is it regulated? Is it listed on an exchange? Is it the same entity that my bank just transacted with? This is exactly what Alacra's reference data services do. We cross-reference and map different legal entity identifiers together. Our Alacra Authority file provides access to a database of entities that are cross-referenced with all of the commonly used public identifiers, such as the GIN, the FRN, or the CIK. We can also cross-reference to proprietary vendor identifiers, such as the SWIFT BIC or the DMB DUNS, where a client has an appropriate end license. Think of it really as the Rosetta Stone of entity identifiers. Now we can answer interesting questions like how many entities with LEIs are also regulated, how many hedge funds have LEIs, and then go even further and answer secondary level questions like what is the lapse rate just for rated entities or just for listed entities, or how many of the SEC regulated institutions have lapsed LEIs. So with that in mind, let's go inside the LEI. So first of all, let's look at the rated, regulated, and listed universe. The Alacra Authority file provides reference data and entity identifier mapping on a universe of almost 250,000 entities that are either rated, regulated, or listed. This dataset contains most of the common customers and counterparties of large global financial institutions. So from a KYC compliance perspective, these entities may be considered lower risk as they are overseen by another official body. For the LEI to really become the industry standard, we would expect that all of the entities that are active in the financial markets, nominally evidenced by them being rated, regulated, and or listed, would have LEIs. However, currently, only 13% of the rated, regulated, and listed universe actually have LEIs. Let's break that down by each constituent part. Firstly, the rated universe. Alacra tracks those entities or issuers rated by the four major rating agencies, AM Best, Fitch, Moody's, and S&P. This totals a little over 70,000 entities, unique entities globally. Around 19% of these entities have been assigned an LEI, which is pretty much in line with our last analysis in January of this year. Now the listed universe. Alacra tracks all entities that have either a debt or equity listing on a global exchange. Of the approximately 90,000 entities that are listed, only 19% have been assigned LEI, though this is a slight increase over the 17% assignment level from earlier this year. On the regulatory side, Alacra monitors over 60 financial market regulators in the G20 and or European Union. Together, they are currently regulating over 100,000 entities. Ideally, all regulated entities worldwide would have an LEI, supplementing or indeed replacing the entity identifiers currently used by the regulatory bodies. We focused on the 17 regulators who regulate over 1,000 entities each. The percentage of those entities with LEIs varies dramatically, from almost none, as you can see on the chart, for the Australian Securities and Investments Commission, the Reserve Bank of India, and Mexico CNBV, to BaFin with 83%. Notably, this is the only one with over 50%. Again, if the proliferation and expansion of LEI issuance is really to take hold, regulators must do more to encourage and or mandate that entities they regulate have an LEI. Let's look beyond the rated, regulated, and listed universes to other important universes of legal entities. On a daily basis, Alacra's Legal Entity Directory tracks a superset of almost 5 million unique legal entities maintained by the major data vendors, such as Bloomberg, Thomson Reuters, S&P, Moody's, Fitch, and others. Where an entity has an LEI, it will typically be covered by a major data vendor, but millions of entities in their universe do not yet have an LEI assigned. Looking at this the other way, we examined the universe of entities that have been assigned LEIs but are not covered by the major data vendors. Over 50% of this gap was made up by entities in Italy, Japan, and France. More specifically, 25% of the entities not covered by the data vendors are funds, predominantly Japanese and French ones, while 17% of the entities are Italian individual enterprises or sole proprietorships. It's not immediately evident what is driving this relative over-registration of LEIs among these universes. It would actually be an interesting follow-up research exercise to see if there were marketing campaigns or incorporation practices that enforced, encouraged, or streamlined the issuance of LEIs for such entities. Looking at a couple of other important universe of entities, the Bank Identifier Code, or BIC, is a unique identification code issued by SWIFT that is used when transferring money between banks, particularly for international wire transfers. The chart shows that only 25% of the top-level entities in the BIC universe currently have an LEI. The GIN, the Global Intermediary Identifier Number, is issued by the IRS to foreign financial institutions, FFIs, as part of the Foreign Account Tax Compliance Act, FATCA. The goal of FATCA is to reduce U.S. tax evasion by requiring FFIs, such as banks, funds, trusts, asset managers, and insurance companies, to report certain information to the IRS about their accounts. The chart shows that only 17% of FFIs in the GIN universe also have an LEI. Another interesting universe is the European Banking Authority. This is an independent EU authority which works to ensure effective and consistent prudential regulation and supervision across the European banking sector. The chart shows that only 55% of the EBA credit institutions have LEIs. Again, as regulators mandate or encourage the use of LEIs, we expect this percentage to increase. We also examined the usage of LEIs among hedge funds. We looked at the top 200 hedge fund managers compiled by Harrison Scott Publications. At this point, only 42% of these top 200 hedge funds have requested an LEI. In this latest edition of research, we also took a deeper look at the coverage of LEIs across the corporate hierarchy of a number of major banking institutions. The National Information Center, NIC, is a repository of financial data and institution characteristics collected by the Fed. Amongst other data, it provides hierarchy reports that detail corporate hierarchy information on banks and other institutions for which the Fed has a supervisory, regulatory, or research interest. Alacra examined the hierarchy report for 3 major U.S. financial institutions in order to assess what percentage of the legal entities disclosed in each report had been issued an LEI. Now it's interesting, while market participants uniformly promote the value of the LEI initiative and are especially interested in seeing the successful implementation of the next wave of LEI information, namely corporate hierarchy linkages, it's very disappointing to see that these institutions themselves have only requested LEIs for between 5 and 15% of their own family trees. While the widespread adoption of the LEI is dependent on a number of forces, most notably regulation, Alacra would hope to see more and more financial institutions take the initiative and request LEIs for each of their legal subsidiaries. We would also encourage the LOUs and the GLIFE to streamline the registration process to allow institutions to register multiple subsidiaries at the same time or as part of the same program. Switching gears, let's look at how LEI issuance is developing around the globe. When obtaining an LEI, an entity can work with any LOU irrespective of the location of the entity or of the LOU. A number of LOUs have grown their global business operations to assign LEIs across multiple countries. While some LOUs are merely filling the gap by being a source of LEIs for neighboring countries without their own LOU, we continue to see LOUs actively assigning LEIs in jurisdictions who have their own indigenous LOUs. In 6 countries, there are at least 10 separate LOUs issuing LEIs, and each of these countries already have their own indigenous LOU.
Alan, we'd like to interrupt with a question if you wouldn't mind.
Absolutely.
The question is, could you provide more information on what you mean by LOU?
Sure. So an LOU is a local operating unit. These are the independent business operations located in a number of different countries. There's, I think, 29 at this point that are fully approved and accredited by the GLEI. They are businesses where you would go and request to have an LEI issued to you. All of these businesses have to request accreditation and be approved by the GLEI, but they all generally offer the same service in assigning you a unique LEI, and when you pay your annual fee, they also go through the process of validating that information. We'll talk a little bit more about them at this point, because we're looking at a graphic which is showing the number of LEIs issued by each LOU. It's in pretty small print, so I would certainly encourage everyone to go download the official report from our website if you haven't already done so. What you can see here is that there are 29 LOUs currently assigning LEIs, and these are all across the globe. Although what you'll see is that about 80% of issuance is coming from the same 4 LOUs. In particular, the US-based GMEI continues to lead the way, having assigned almost as many LEIs as the rest of the LOUs combined. Now, looking at this from an LOU perspective, we continue to see what we've been calling the rise of the super LOU, where 3 of the major LOUs are each assigning LEIs across over 100 countries. These super LOUs are actively marketing their services and in some cases, many cases, competing with each other. As a side note, it will be interesting to see how the competitive landscape changes later this year when Bloomberg enters the market as an accredited LOU. So let's talk a little bit about the renewal process or the non-renewal process and lapse rates. The initial fee for having an LEI assigned covers the maintenance of that LEI for 1 year. After that, the entity has to renew the LEI and pay the annual fee in order to maintain the LEI status. But what does that mean exactly? The LEI identifier itself is not recycled, so it remains the unique identifier for the entity. However, the LOU does not conduct the maintenance review of the associated reference data, and the entity is identified that it has not renewed, or as it is often described, has lapsed. Let's take a look at the lapse rates. As of April 2016, almost 115,000 LEIs have not renewed. This represents an overall lapse rate of 27%, which is slightly up from the rate of 24% in January this year. Put it another way, in the last quarter, around 20,000 new LEIs have been issued. At the same time, 15,000 formally assigned LEIs that have come up for renewal have not been renewed. Furthermore, when you remove entities that were only assigned LEIs in the last year and thus have not yet come up for renewal, the lapse rate is actually 32%. For LOUs that have issued over 150 LEIs, so filtering out some of the smaller ones, the US LOU continues to have the highest lapse rate of around 35%, followed by the French LOU with 32%, Spain 25%, Italy 21%, and the UK with 20%. Overall, 12 LOUs have a lapse rate of higher than 15%. Now, while the overall lapse rate is 27%, the breakdown of those numbers suggests that some of these non-renewals were due to entities being assigned an LEI that they may never have needed. Entities that are regulated, rated, or listed, and thus make up the most prominent and active participants in financial markets, all have lower lapse rates. That said, it is still pretty surprising to see that the lapse rate for these listed, rated, and regulated entities is consistently over 20%. This quarter, we also took a look at lapse rates by regulator or jurisdiction. A slightly different spin on the lapse rate by LOU, because as we noted, LOUs can be assigning LEIs well outside their geography or jurisdiction. Of the 17 regulators in the G20 and or European Union who regulate over 1,000 entities that have LEIs, the lapse rate varies considerably. While BaFin in Germany has a lapse rate of only 5%, the US SEC has a lapse rate of almost 40%. It will be interesting to further analyze the nature of regulation in each jurisdiction to see if there are indeed any insights into the impact of regulation coverage, wording, or enforcement on these renewal rates. So where do we stand after this 9th edition of our Inside the LEI? Issuance continues to be driven by a small number of LOUs, with over 85% of the new LEIs issued by only 4 LOUs, the US, Germany, UK, and Italy. And again, it will be interesting to see how this dynamic changes when Bloomberg enters the market as an LOU later this year. While market participants uniformly promote the value of the LEI, it's disappointing to see that the banks we analyzed had only requested LEIs of 5 to 15% of their own corporate hierarchies. Similarly, only 42% of the top 200 hedge funds had requested an LEI, and of the universe of almost 250,000 prominent financial market entities that are rated, regulated, and listed, only 13% have LEIs. Regulators, too, can do more to encourage LEI usage. Of the 17 largest regulators in the G20 and EU, only BaFin in Germany has more than 50% of those entities having LEIs. And finally, the overall LEI lapse rate of 27% is slightly up from the rate of 24% in January 2016. And of particular note is that while 20,000 new LEIs have been issued in the last quarter, around 15,000 previously assigned LEIs have not been renewed. And that concludes our analysis. Be happy to open it up for questions.
Hi, Alan. We do have a question that came in. In your opinion, what do you think about a bank continuing to use an LEI that has a lapsed status?
Thanks, Sharon. So I'll be honest here. I'm a little bit on the fence with this one. I certainly agree that the LEI remains a unique and persistent for the entity. So it is indeed a good, unique identifier for that entity. But if it doesn't go so far as to validate the reference data attributes associated with that entity, it doesn't validate that those are correct, I feel like it really does undermine its value. You know, in an extreme case, you know, those reference data attributes would be the name, the address, the industry, the jurisdiction. If you can't rely on that information for risk reporting or classification, it means you need to go back to other sources of reference data to be able to conduct your transactions, onboard clients, etc. And all that will, you know, undermine the initial intent of a single unifying identifier. I think actually that going forward, this will be a continued challenge as, you know, as the glyphs and the LOUs start to collect additional information, and, you know, most notably that will be corporate hierarchy information. The real value of that data is predicated on it being validated and up to date. It really doesn't help to have the correct entity if the reference data you're looking for can't be relied upon within risk reporting or transaction reporting.
Okay, I have one more question. Is the increasing number of LOUs a good thing for the development of the LEI?
So I'd say generally competition is a good thing. It's good when it raises quality and lowers prices. I'm a little wary when it spends money just on excess marketing to the same already well-served geographies and users, but, you know, sometimes that's necessary as each player competes for long-term positioning. That said, if the LOU landscape is representative of general market dynamics, and it may not be because of the interplay of regulation and you know, the global glyph mandates and business model, then I think I'd expect, you know, the smaller LOUs to disappear over time, perhaps leading to a small handful of places to register for an LEI. I do think the constraints around the business model and pricing set by the glyph may mean that LOUs operate at a scale may have an economic advantage. also, as registration is not tied to geography, I think it's very likely that you'll see more and more larger LOUs and fewer of the small ones. That said, if local regulators, for whatever reason, require registration via a local LOU, it may be a different story, and that may continue to protect and substantiate having smaller local LOUs around the globe.
Collapse?
So I think there's a lot of different reasons for that. I think the most common reason is that entities that requested an LEI for whatever reason, and then really worked out that they didn't need one. So, you know, as we analyze the universe, we find that LEIs have been assigned to religious schools and to wind farms and to YMCAs. Those pay a renewal fee to maintain the information, which is basically their name, you know, address and location. I'm not sure they see the value in doing that. It hasn't affected them by not having an LEI. I think sometimes there's you know, a small amount, there's a lack of understanding that once you register for an LEI that there is an ongoing maintenance to keep the information up to date, and for a company itself understanding the value of why to pay when they're actually providing this information. So they may not be seeing the value that's provided by the LOU doing the review and maintenance of that information. You know, I continue to expect the lapse rate maintain them, but haven't quite seen that yet with the data.
A couple more questions came in. Do regulators require the renewal of an LEI?
So first of all, you know, what do regulators do? In certain specific cases and in markets, they require an LEI. Right at the moment, this is for transactions in the derivatives market. So yes, they require an LEI, and by implication, they require it to be valid whenever you're doing a transaction. But it's such a narrow part of the, you know, the full superset of all of the entities which are which will see higher usage of LEIs. When it comes to lapse rates, I guess it's a bit of a gray area, because I think the market is still getting its head around how does it feel about a lapsed LEI. The GLICE has come out and said that a lapsed LEI is still a valid LEI. It is still the unique identifier for that entity, but you should really be checking the reference data associated with it, because the LOU is not reviewing that if the maintenance fee is not paid. So to some extent, it depends on, I guess, the fine print within the regulation as to whether it's very explicit that you need to have an LEI or you need to have a properly maintained LEI. And I think this is creating a little bit of a gray area, and hopefully as more regulation comes out going forward, it will kind of resolve and remove any of the gray area on that topic.
Okay, we have another question, and this is sort of a two-parter. Can LOUs be expected to accurately validate hierarchies? And are there other entities, such as auditors, that are better positioned to do this job?
So that's a great question. I think it's a very interesting question around, you know, the accreditation process. Right now we have LOUs which are Basically, they're a portal for collecting a request and collecting a bunch of information, and then there's a review process of, is this information correct? We know that at Alacra, there's a world of difference between going out and finding out the correct address for a company and going out and understanding what is its ultimate parent, what is its intermediate parent, etc. So I think some of the data vendors, traditional data vendors that collect that information, so a whole host of them, Bloomberg, Thomson Reuters, Dun & Bradstreet, BVD, etc., I think would be very well placed to do that sort of work. Many of the current LOUs are some combination or sponsored by institutions which have very solid financial, data analysis capabilities. It's particularly interesting to note Bloomberg's recent announcement of requesting accreditation to be an LOU and pointing out that in the original accreditation process, as their nature as a financial information business, they weren't able to get accredited to do it. So I think, again, the quality of the service and the capabilities are coming to the table. The competition will make this process better. I do think there's a number of other businesses out there that would be very well placed to collect and validate this information. I think the current LOUs have, developed a lot of experience what they're doing, and I think some of them will do just fine. And I would hope and trust the GLIFE to continue to maintain and review and update their accreditation process as this new set of data and requirements for an operating LOU come into place. I'm not sure if I'd say auditors or other professional service firms would be as well placed to do this. I do think that the traditional data vendors are probably what I put top of my list as definitely having those capabilities as an organization that's not currently an LOU.
All right, well, thanks for that.
I wasn't sure if I answered both parts or I just got through one. I think I got both.
Okay, so that we don't have any more questions at this time, so why don't we wrap things up? If we can go to the next slide. As always, if you do have additional questions, please feel free to reach out using the contact information shown on the screen. And you can always log on to www.alacra.com and send questions through the Contact Us form on the website. The slides and recorded webcasts will be uploaded onto the Alacra site at the end of the week and will be available for replay. We always appreciate your participation, and we look forward to you at our next event. Thank you, everyone, and have a great day.